What's up, everyone? This video is for all of you Robinhood traders out there. If you've recently, over the last year, started investing in the stock market, this video is for you. Pay attention until the end. This could save you thousands of dollars. If you buy and sell stocks, if you buy and sell funds, if you have a Robinhood account, if you're working from home and trading some stocks, or you have a platform where you're handling that on your own, or if you have a financial advisor helping you do that, you have to file those things on your tax returns. Any investment accounts have tax impacts. There's something called a 1099-B. It's a 1099-B year-end stock statement. Those have to go on your tax return and can make a huge difference. If you don't do it, you're going to get a notice from the IRS in about a year. It's going to be massive because they see all these stock sales and don't realize you have basis. So just make sure you do that. If you haven't filed 2020 yet, make sure you put that 1099-B on there. If you have and you left it off, go back and amend it now. You need to get that on there. It's really important. The 1099-B has dividends. If you don't know what dividends are, you probably shouldn't be trading on your own. It has interest and it's going to have stock sales. It's going to have short-term and long-term stock sales on there. Big difference when it comes to taxes. You need to understand this. Short-term gains and losses, or if you held a stock less than 12 months. Long-term gains and losses, or if you held a stock over 12 months. Short-term gains, those are taxed at your ordinary tax brackets. For most of you, that's going to be 22 or 24% Fed, 5 or 6% state. You're paying about 30% taxes on any short-term stock gains. So let's say you bought a stock, you made 20 grand on it, expect to pay around $6,000 taxes on that stock if it was short term. So make sure you set that aside. Don't invest in another stock, don't lose it. You're going to owe taxes on that. What determines if a stock is taxable is not if it's going up or down in value, it's if you sold it by the end of the year or you sold it anytime during the year. That's when you recognize that gain. That's when that takes place. So now let's talk about long-term. Long-term holding has more beneficial tax treatment. So that's something you can utilize in your advantage on your tax return. Those rates are 0, 15, and 20%, depending on your other income. If you make less than 40 or 80 grand if you're married, you pay 0% capital gains on stock sales. If you make between 80 and about 450, you pay 15% capital gain rates on stock sales or investments. And if you make over 450 or 500, you pay 20%. So that'll give you a little guideline of what to expect. You take that same scenario, you held the stock for over a year and you sold it and made 20 grand, you're only paying $3,000 in taxes instead of that $6,000 I told you about earlier in that example. So a major tax difference in how long you're holding stocks and how you're treating that from a trading standpoint. So just know there's significant tax impacts there. Now, here is the big one. This is the one I'm seeing this year more than anything else, and people have no idea what they're doing from a tax standpoint. Wash sales. If you don't know what wash sales are, pay attention now because this could save you thousands of dollars. Wash sales are when you sell a stock and rebuy that same stock in the same 30-day period. So if you sell something on November 15th and you rebuy it on December 10th, that is considered a wash sale. You can't take that original sale loss on your tax return. You can't offset other stock sales or gains with it. I've seen that over and over and over this year. I've seen more Robinhood statements than imaginable on tax returns this year from clients. I've got probably 35 or 40% of my clients become investors in 2020, which is awesome. They're investing in the market, they're making money, but they have no idea about taxes. So this is for you. Had one client, he had $90,000 in gains from stock sales, but he had $70,000 in losses from wash sales. He only netted $20,000 in stock gain, but because he had these wash sales take place, he got zero loss to offset and net that out. So in that scenario, he paid taxes on $90,000 of gain, of short-term capital gain. He paid $30,000 in taxes and he only made $20,000 in the stock market. That's how important this is. Make sure you don't sell stocks and rebuy the same stock within 30 days if you're trying to take advantage of the loss or if you're actually trading or day trading. That is horrible for your tax situation. I had a client do $5 million worth of stock sales. He had $120,000 worth of wash sales. This cost him $40,000 in taxes. He didn't have a lot of money in the account. He had 20 grand, but he was trading it over and over and over and over every day. So that totaled up over the course of the year to over $5 million in stock sales and 120 in wash sales. So he lost a ton of money on his tax return. It's just a bad tax situation and there's no way to unravel it or get out of it once you do it. So that is your big tip for today. If you're a Robinhood trader, if you work from home and you trade, if you're trading stocks or doing some sort of day trading, be careful right now. Listen to this video, Google wash sales, learn everything you can about it because it's tremendously important on your taxes. I hope this helps you save thousands of dollars on this tax return and in the future. Have a great day. Thanks.